Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 4:30 in New York. It is Thursday, 23rd day of March 2017, and this is the Daily Report for gold and silver. We do have modestly lower gold pricing today and quiet market activity as a whole as market participants await the outcome of the vote tonight to repeal and replace Obamacare with the new American Health Act that was proposed by Ryan. Now, more at stake is really the credibility of this new administration to accomplish tasks, to get things done. And it speaks to the Trump trade, so to speak, or that optimism that has been so prevalent in the market, which is based upon transformational changes, upcoming changes, because of this new administration. So whether or not this bill moves forward is going to be a great indicator as to the future direction of this country. And that's why many believe it is so critically important in terms of the outcome. Gold futures trading off about $4 on the day. We are looking at most active April at 1245.40. The low on the day has been 42.70 and the high 53.30. Now, when we take a look at the outer month, which is the month that we're currently trading in, that would be the June contract at 1248.50, also off, as I said, around $4.30. Over to silver. As you can see, silver ticking up a little bit, but there has been an incongruency between gold and silver prices. They haven't been moving as closely in tandem as we have seen them move in the past. 1760, that is the current pricing. The low on the day has been 52.5 with a high of 1771. So traders, interesting chart formation today. No doubt over the last couple of days, we have run into our first real test of rising gold prices and potential resistance areas. As you know, we are on record looking at two specific price points for potential resistance, and it's really based on a Fibonacci harmonics of a very, very short-term retracement and a very long-term retracement. The first level comes in as a 50% retracement at 1247.80. That is this line right here, and I'll kind of put that across, and I'll show you as I compress the chart what that covers in terms of where the start and end point are, especially in pricing. The next line is this blue line here, and it is a 38% retracement of a much larger move, and therefore to me has much more weight. So we have the first area at around 1250. We can see that we did make a higher high today than on previous days. And when we consider the rally itself, the fact that we close nominally lower, we have no significant chart damage, but we do have our first signs of a potential top in the market. But I am also on record believing that that's going to be more of a minor level, with a major level of resistance that I believe we will encounter up here at around 1260 to 1265, and that of course is the highest high that gold is traded to this year. Now I want to address this particular 38% retracement, and to do that what I've got to do is really compress this chart to really illustrate what we're looking at. And this is what I mean. I have a very, very long retracement that starts in December of 2015, not 16, but the absolute low as gold traded from 1900 in a multi-year correction. It ended hitting this low. This was the lowest low it hit. People were calling for $800 gold. I remember that distinctly. My number was actually 1037, a Fibonacci-based number. We came pretty close. But when we consider the move from 1040 up to the high of last year, which was 1380, and then we look at the 38% retracement, that's where this number of 1250 comes in. So it is a pretty strong fib retracement point by virtue of the fact that it is accounting for such a large time scale and price scale. However, my sense is that if we make it above this particular area, and I believe that that's very, very easy to overcome. I'm more concerned about this top only because it is the highest high that gold has traded to this year. But if we, for some reason, sell beyond that point, We're really looking at our next target, which comes in at around 1277. And then above that is 13 to 1307. Those are our upper levels of resistance as I see the market now. In terms of support, I do see some strong support at approximately 1236.80. And then at this top right here, which comes in at about 1240. And as I said, we're trading approximately at 1245. So traders, absolutely maintain your current long position. As I said yesterday, we want to watch this vote closely because the outcome of this vote will have, I believe, a tremendous effect on the future price of gold. If the bill passes, you're going to see, I believe, a revitalization of the equities rally, the Trump trade, so to speak, and that would put upside moves in the dollar and could put significant pressure on gold prices. The reciprocal is also true. The inability to pass it or a stalemate would further the cause for gold bulls. So again, maintain your current long position, but watch closely the outcome of the bill and then act accordingly with the parameters that I've just spoken about. In other markets that we look at, flat day in the Dow Jones Industrial Average, fractionally lower on the day at 20,656. When we look at the Standard & Poor's, again, fractional changes, but they are to the downside. And then lastly, NASDAQ, again, fractional change to the downside. Of interest, though, is crude oil, which is slipping again, now breaking below $48 per barrel at $47.71. Time permitting, we certainly want to look at a crude oil chart. And then lastly, the dollar, fractionally unchanged. As I said, the majority of market participants are in a holding pattern, and they are waiting the outcome of this upcoming vote. Although we're not seeing anywhere near the kind of sell-off that we witnessed a couple of weeks ago when oil broke from approximately $54 a barrel down to well below $50, about $49 per barrel, what is significant today is we've broken through 48. So the question is, will we, on a technical basis, see crude oil find some sort of support in this area and then trade back up the channel, or will we break below this and go to new lows? As far as the dollar goes, we are at a potential support level. We've seen the market move from roughly 102 to its current pricing just at around 99. When we take a look at activity at this price point, we can see two areas in which this was a supportive area in terms of price. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the weekly wrap-up and review. We'll talk to you then. Bye-bye.